we took a balanced approach into the year, believing big in broad diversification, using a lot of different asset classes globally. That worked out pretty well for us. So we didn't really have to adapt a lot. Obviously, during the first half of the year, we saw a strong rally in US equities becoming ever more expensive. And a little bit of adaptation was needed to adjust for that. But I guess other than that, no big surprises so far. And yeah, quite a good position for us so far this year.
Let's talk a little bit about that strong rally, because we saw it quite concentrated around the tech stocks. Do you believe that at some point towards the latter part of the year, we might see it broaden out a little bit?
Yeah, well, it remains to be seen. I guess you're 100% right, obviously, with that concentration on the tech sector, which really drove the rally. And that's also that bit which actually surprised us a little bit, because we were coming off very, very high valuations already, an economy which globally started to slow. And we thought that eventually the market should take a break earlier, especially on the back of a slightly weaker economic outlook going forward. But not too much of that has materialized yet. So broadening out, I think, is a strong claim, because we actually see the market potentially weaker from here.
Okay, we'll get to that in a bit, but let's talk about what surprised you the most when you look back at the first half. Was there a particular sector or a particular stock?
Yeah, I don't want to speak individual shares, but it would really be the strength generally of that tech sector driving the whole US market, and that concentration, which you had already mentioned. And the reason why that comes a little bit of a surprise is because tech shares, that's something where you buy earnings which are quite still far out in the future, right? So you're not buying the immediate earnings, you're buying earnings which potentially crystallize many, many years down the line. And with that, these shares should actually be quite sensitive to high interest rates. And other than the market initially anticipated, interest rates have not come down yet in the States. That should have actually been negative on the tech sector, and it hasn't played out like that yet. So for us, we stay broadly diversified, then we don't take too much harm by being surprised by these themes. But generally, that's something which really caught us a little bit off guard, maybe.
I want to go back to your previous comment around your expectations, or perhaps seeing some kind of weakening that might play out in the markets going forward. What would underpin that weakening?
I think most importantly, we have to look at the global economy and global growth, mostly driven by US growth. So we track the US economy in real time by looking into 130 million data points every single day. So with that, we've got our finger on the pulse, knowing where the US economy really is ticking along. And we've been quite confident over the last 1.5 years, so to say, that there's no deep recession coming. We're quite brave to make that strong call, which panned out nicely. Having said that, that might change now. So we are tracking a little bit of weakening right now, not quite a recession as of yet, but that's definitely the one key theme which we will look into in the second half of this year, is the global economy really slowing down on the back of a potentially weaker US economy.
Okay, let's focus then in on the US economy. We've been talking about rate cuts and where the expectations would be. Are you leaning with the consensus view that perhaps we might see a US rate cut in September?
Yeah, definitely. We would go with the consensus. Yeah, pretty boring, I guess. Always more interesting to be controversial or be swimming against the trend. But I guess we have long said that inflation is on a downward trajectory, and potentially on a faster downward trajectory than market participants initially anticipated. And that's exactly what has played out now over the last couple of months, especially in the last quarter, where we've seen ever lower inflation prints. People sometimes still say inflation is sticky, but if you look at the underlying drivers of inflation, inflation continues its journey downwards, and we expect that to hold. So with that, we are at a point now where the Federal Reserve can actually afford to cautiously bring rates down. Remember, they also don't want to be too high for too long. That also bears risk. So with that, we would support a rate cut in the States in September, 100%.
All right, let's talk about the trends that you're seeing in the market. What kind of trends do you anticipate to drive earnings growth, whether you're looking at South Africa or the States?
I guess people often mention artificial intelligence and technology in general. I mean, the perfect proof is that strong tech sector, that there's something there. So I guess that's a key trend to keep on looking out for. We've got very stretched valuations in that space. People call it a bubble, I guess, some people at least. So we have rallied very hard in that tech sector, but it is on the back of very strong trends. So these trends around artificial intelligence, they can vastly improve productivity. And the growth in productivity is very good for inflation to continue to come down, but it also stimulates economic growth. So if you ask me for the one key trend to keep an eye out, other than the direct economy, I would definitely look into artificial intelligence. There's a definite chance or probability that trends continue to take off and it continues to drive capital markets.
Before I let you go, is there a risk in the markets that you're looking out for, especially now that we've kicked off the second half of the year?
I guess there's always plenty of risks. I'm quite glad that more locally we've gotten the election out of the way. So I guess that takes away one key political risk here in South Africa. But obviously, globally, the story is different. So we still must be very cautious about what's going to happen in the United States once again. The elections are around the corner there, happening early November, and it's not quite clear to see a good outcome there. Whether the winner is Donald Trump or Joe Biden, that's not what I want to go into, but more a democracy that deep in a crisis. We can just hope that everything goes well during the potential handover of power.